401k plans are easily the best return you'll ever get investing, but most employers do a horrible job at answering your questions. By the end of this video, you'll have your 401k questions answered and we'll see exactly what you need to do to get your nest egg back on track. We're talking 401k investing today on Let's Talk Money. Beat debt, make money, make your money work for you, creating the financial future you deserve. Let's Talk Money. Joseph Hogue with the Let's Talk Money channel here on YouTube. I want to send a special shout out to everyone in the community. Thank you for taking a part of your day to be with us. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. Now, we already saw some of the worst 401k mistakes in last week's video and got a glimpse of those tragic 401k average balances. More than 7 million retirees are living in poverty, according to a study by the Kaiser Family Foundation, and tens of millions are just scraping by. I got a lot of 401k questions after that last video, so I wanted to make this one to answer your most common questions, talk about those average balances by age, and show you how you can catch up even if you're already behind in your retirement investing. For those in the community following the channel, you know I'm a huge fan of 401k investing. I spent more than a decade as an investment analyst and a wealth manager and can tell you that decision to invest in your company's 401k is the best you'll ever make. That company match on your contributions is like free money and is without argument the highest return you'll ever get anywhere in investing. Now, this is the second of our three-part video series in partnership with Blooom on 401k investing. Blooom is an independent 401k manager that works with your existing retirement account. You can connect your 401k account with Blooom software and it's going to show you the investment fees you're paying and how to get back on track. Now, I'm going to tell you more about Blooom later and share a special offer to get a free 401k health analysis. But first, I want to get to those most common 401k questions. I'll cover the 5 most common here, but if I don't answer your question, scroll down, ask it in the comments section, and I'll answer it personally. Now, the most common 401k question I get is just about those basics of the program. What is a 401k account? This is a special retirement investing account set up by your employer with a plan administrator. It's usually an investment company. The plan includes a list of stocks and bond funds in which you can invest. You set up how much you want to invest regularly, and that money comes out of your check before taxes are taken out. Besides that pre-tax benefit, most companies are going to match a portion of your investment. So a typical company match is that your employer is going to put in another half of what you put in, up to about 6% of your total salary. These are 2 huge benefits of 401k plans, that tax benefit and the company match. Another common 401k question is around vesting. Now, what it is and what does it mean? The vesting schedule is how much and when you get to keep that money your company puts into your account as that match. Now, I know it sucks that you don't get to keep all your company's match immediately. You'll always keep everything you put into the account, but the company's match is yours gradually. It's just a way for the company to keep people around longer. For example, here we see the vesting schedule for workers at Sprint. So if you're a Sprint worker and you're contributing to your 401k account, the company matches half of your investment up to 4% of your salary. So if you make $40,000 a year, the company is going to match 50% of your contributions up to $1,600. So they'll put in another $800. So Sprint's going to put its match amount in every time you invest. But according to this schedule, if you leave the company after a year, you only keep 33% or a third of what they put in. If you work 2 years and leave, then you keep 2/3 of what the company's put in. This is actually a really nice vesting schedule. When I was an economist for the state of Iowa, the 401k vesting spread out over decades, so it took much longer to keep all of that employer match. Our third 401k question is just how should I invest my money? And that's really the million-dollar question. This is one of those big 401k mistakes we talked about in that last video, being either too aggressive or even too conservative with your 401k investments. Too aggressive and you set yourself up for huge losses in the next stock market crash. Too conservative and you won't reach your goals. Now, I've got a video here on the channel about how your investments change as you age, but this is really where that free 401k checkup from Blooom comes in handy. The Blooom software is going to look at your 401k investments, your age and your goals, and is going to show you exactly where to adjust your money to reach those goals. Not only that, but it's also going to uncover those hidden fund fees that you're paying. It's all free and takes less than 2 minutes to check your 401k account. So I'll leave a link to that in the video description below. The 4th most common 401k question I get, and this is a huge one, should I borrow from my 401k plan? Short answer, no. Taking a loan on your 401k account might seem like easy money to pay off debt or whatever, but it comes at some very high costs. First, you're paying that money back with interest and with after-tax dollars, so you're just destroying that sweet tax advantage in the 401k account. A lot of plans also don't let you contribute while you're paying back the loan. So it could be a very long time you're missing out on these benefits like a company match and those tax advantages. Worse still here though is the fact that you could be up for a 10% penalty in taxes if you can't repay the loan or leave your job before paying it off. The fifth most common question we got was, how much should I have saved by my age, and how do I get back on track with my 401k? So that's why I wanted to go back to those average 401k balances by age and give you a few tricks to help grow your nest egg. Now, we saw in that Fidelity survey the average retirement balances by age. So you see here the average 401k account is about $167,700 for people aged 60 to 69. The red bar here is how many times your salary Fidelity recommends you have invested by that age. So someone between the age of 40 and 49, they say you should have about 3.5 years worth of your salary saved by that point. Now there are a couple of huge warnings here with both of these numbers, the average 401k balance and that recommendation of how much you should have saved. First is that if you're comparing your 401k balance by the average here, you might already be off track. That's because most people are tragically underinvested for their retirement. That $167,000 average balance in your 60s is only going to provide for about $560 a month in retirement. And that's if you're withdrawing 4%, so that's definitely not a target you want to aim for. Second here, and while I like the simplicity of Fidelity's target for how many years you should have saved, it's not the kind of personalized advice you need. This is 30 years of your life you're talking about. Do you really want to have it up to a rule of thumb or a quick guess of how much you need? No, you want to save for your personal goals and that bucket list you always wanted to do in retirement. So actually sit down and write out a story around your retirement. What do you want to do and what does life look like? This is not only going to help you put a number on your expenses, but it's also going to make those goals real. You're going to have that mental picture of your retirement that's going to be all the motivation you need to keep saving even when budgeting gets tight. That's actually your first tip for getting back on track, just knowing exactly what your goals are and finding that motivation you need to save. Then, and this is another one of those huge mistakes we saw in that first video, you've got to watch those hidden fees in 401k plans. Between load fees, annual management, and other costs, these fees can cost you hundreds of thousands over decades of investing. In fact, Forbes found that in one study that a difference of just 0.93%, less than 1% in fees, can cost a single investor up to $215,000. Besides saving on the money you've already put in, you can also put more money in your account once you reach 50 years old. These are called catch-up contributions, and in 2018, you're allowed to put in another $6,000 a year into your account, and you get those tax benefits once you reach 50. It's a great way to build your nest egg just before it's ready to hatch. Blooom is going to help you answer a lot of these questions, and maybe more importantly, find those hidden investment costs in your 401k plan. The website is offering a free 401k checkup with the link below in the video description. It takes less than 2 minutes to connect your 401k account, and that software is going to show you exactly what you're investing in, how to adjust your investments according to your personalized needs, and all those hidden fees in your plan. It's all totally free and there's no obligation after that checkup, so click through and see how you can put your retirement investing back on track. Now, I'm going to do a complete review of Blooom in our last video in this 401k investing series, including how to put your 401k on autopilot so you never have to worry about it again. I'll walk you through the website and show you how Blooom can help put your retirement investing back on track, all in the next video, so make sure you don't miss it. We're here Mondays, Wednesdays, and Fridays with the best videos on beating debt, making more money, and making your money work for you. If you've got a question about money, just scroll down and ask it in the comments, and we'll answer it in the next video.